GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar series. Wanted to put some special attention on shares in Hong Kong today, and I'll show you that chart in just a moment. But for those who are regular watchers, you will know that our usual routine is that we go through the major currency pairs, commodities, indices and cryptos. And so the main ones we'd like to look at are the euro dollar, dollar yen, the pound dollar, Aussie dollar, gold, Bitcoin, WTI crude oil, and the S&P 500, the SP 500. But as I said, we're also going to look at HK shares as traded on this platform, just because there's a bit of a breakout taking place in the shares there. And actually, mainland China shares have broken out to 5-year highs. So without further ado, let's have a look at that. And here is our HK shares on the platform here. You can see that this is a daily candlestick chart. I've zoomed in a bit too much there, zoomed out a bit too much, but here you can see this was obviously the March sell-off, which all stock markets have experienced. There was a rebound in Hong Kong shares, but they were capped at those prior lows, prior to the lows that were in place prior to, you can see there was a bit of kind of a consolidation prior to the rebound in March. The shares had tried to broken out higher on this occasion, fallen down, and obviously had that big crash. And now we're up and above, well up and above these levels, and you can see this was the lows through here. Here was a little false attempt to break higher. We ended up turning lower. Same again. This was a series of attempts to break beyond it, struggled but held the lows, and then eventually after this period of consolidation broken out, and you can see that we've gapped above this previous peak here, and that's where we've opened today, well up here, and up testing into the 10,700 areas. And so this looks very positive. Clearly there's some resistance on the way up. Looking at this area specifically, which is where we basically said that there was a bit of a kind of a false break to the top side here, which ended up being a top before a big decline. So once we get up here, which I believe is right in around the 11,000 mark, yep, pretty much bang on 11,000, that could be some resistance. And so as I said, we're pushing into 10,700 roughly now, which is this previous peak. So maybe a little short-term pullback, but this look very strong price action here after such a prolonged consolidation. You finally get the breakout. You know, this kind of thing does not look like a false break. This would be very unusual for this to roll over and turn back below this line. I think, you know, obviously there'll be some, I would imagine there'll be some short pullbacks, but I think this is quite a strong amount of momentum. Obviously don't try and buy at the highs, but be aware the pullbacks probably won't come back to this line, I would imagine, before we get up to the 11,000 level and then beyond, and then let's see. Right, let's get back to where we normally start, which is the currency market with the euro dollar. And so this is our 4-hour chart. And if you remember last week, we talked about a couple of zones above 1200 to hold. And I said if 1200 gives way, then we're looking at the 10,000 mark, 10,000, 1.0, 1.10 rather. And let's just see how we got these. I think zoomed out on a daily chart is the best way. You can see through there, and basically we're in a kind of flag pattern, and we've held this prior zone so far, and it's looking good. It's been a series of tests, but we've held them so far, and now we are in this. As I first had the screen here, basically under this declining trend line, but we're looking like we're breaking through to the top side. So you can see the pattern so far in terms of Chinese shares, Hong Kong shares, and riskier currencies like the euro. It does appear like we're breaking out of a period of consolidation. So 112.80 as we speak, but it looks like euro coming out the right side of this triangle pattern, which is part of a kind of longer move up. So you could argue that it's more like a bullish pennant. If we look at the daily chart, it looks a bit more like that. The flagpole pennant pattern, which is like a triangle at the end of a big rally, and then you'd expect something equivalent to this rally to come out the top side, and so that would be quite substantial for the euro and a move into multi-year highs if that were to happen. Let's have a look at the pound. Okay, and so we talked about a kind of microphone type pattern here, so not quite as clear cut as the euro in terms of a rising bottom, but you can see we'd actually highlighted this area of support through here based on these touches on kind of series of touches through here, called this kind of a false breakdown. And actually in the end, so I had these previous peaks in as the kind of first area of support that we were looking for, and then eventually we came down to that zone I'd highlighted almost to the pip, came up, and then interestingly you can see how these things work. Was a pivotal area, broke down, came back through it, tested that pivotal area again, and now we're moving up to the top side. We're pretty much testing this previous peak, and then after a pullback we're out to put that 125 zone. So this to me looks like, if I simplify it, it looks like we were in this downtrend and we've come out, we're pulling back, and this is a pullback for a next leg up. This is the way it looks to me, and that would obviously be in line with the moves that we're seeing in the euro. So let's have a look at dollar yen. So this was the line we had in place last week, and basically we said we'd come off this previous area of support down here, and it looked like there was a reversal taking place, and we're basically looking for a kind of break beyond this patch, and we got that push to the top side in the end. And then what we banged into was, if you look on the daily chart, these series of highs through here. So we've got that big rally up and collapse back through it. So that kind of zone that we've been talking about for a while, that actually held okay. And so again, sort of naturalish looking stuff, got the break up to the top side, hit that old area of resistance. We can see the two peaks through there, pull back into the same zone again, and it looks like we're edging out of it again. Now certainly that was quite a big move lower, so we could come back towards this peak, towards this 50% pullback level. You'll notice again it was like a confluence of resistance. That was the drop, came back to the old resistance plus the 50%, rolled over quite sharply into the old high, so that was a pretty clear-cut trade in itself. And then the other trade that's in play at the moment is the buyback at the old high in expectation of higher prices. So we certainly could roll over again at 108, which you can see is pretty much where again another reason for confluence in this zone, and we could roll over there to test lower prices again. But to me, again, it sort of appears like we're looking to resume more topside here. But this was a sharp move lower, and maybe we've just finished this correction now and we're about to turn lower again. So opportunities, if we get back towards the 50 area, or again if we break down through this area, then we'll show that this is basically going to have another leg down if we break through these lows. So two ways to play this: a kind of low risk opportunity to the downside, back up at that 50% in the 108 for another drop drought, or to playing the breakout. But to me, neither of those seem like the most likely. It seems like the most likely is that we actually do get a break through the top upside here and start challenging eventually up here towards 110. Okay, so let's have a look at the Aussie. And so a bit of a kind of triangle formation going on here. This is our 4-hour chart again. So it's similar to the euro, where we've had a rally up, we've had a period of pause, and now we're up testing the resistance. And you'll see in a minute there's actually again similar looking pattern to the S&P 500, which has been a theme for a while of the Aussie trading alongside the S&P, as both as kind of considered risk assets, if you like. So these are old peaks which we obviously challenged before, the 107. So the last couple of weeks or so we've been trading beneath 107, which was the big resistance area. But the price action today would look like we're in a bit of a kind of coiled spring, and we're about to load up to the top side. It looks like it. We haven't done it yet, and obviously if kind of risk sentiment rolls over, then actually this would be the last attempt at a move to the top side before we turn down. So let's see. You never know, but testing resistance obviously is normally a kind of bullish setup in the markets. It's also tends to be some of the best times to sell is when you're testing the old high. So this is the kind of always the conundrum, but to me the trend is up, and it feels like we're on the cusp of a push to the top side here. But probably if you are trading this breakout, if you haven't bought at lower levels within the range before the breakout, then you do want some kind of confirmation. So the first confirmation will be an intraday close above this triangle high, and the final confirmation that we're getting a more long-term breakout would be a daily close above the 70 level. Let's move over to gold. And here you can see the long-term uptrend is pretty well intact. We've been holding on to the 50-period moving average pretty well, barring a couple of jolts below it. And here we are up and near 8-year highs. And you can see we had a bit of a jolt lower, and then we tested. It was about 1758 or 57. Was this little zone that I've highlighted here, but two big signs of demand coming in and pushing us back above that short-term moving average. And now we're back at this line again. So there was some selling back at that peak where we dropped through, and so this certainly could gather momentum, but it's counter trend. And so to me, again, same logic holds that that in fact generally the best probability trades are to the top side when the trend is up. So that's to me more what you're dealing with. That was the previous peak there. And what happened, false break, managed to get above it again, held, dropped, two attempted moves lower, and we're pushing up again. To me seems more like the scenario. So again, looking more, could be a top, but to me looks more likely the trend continues to the top side. All right, let's look at WTI Crude. Again, another, you see how these markets are so intercorrelated. So another triangle-y looking pattern, right, with a false break to the top side. Crude's been very bullish recently. This is our rally off the lows. And for a while I had this on the chart talking about the gap. We'd already highlighted the gap as a resistance on the way up. It's old news at this point. I've removed it from the chart. What I did want to put on there, which I haven't had before, we've always had this line as that kind of major resistance, but keep in mind this one. So two significant long-term bottoms here. That comes in, these things are always zones, but roughly 42. So watch out for that. Is that we're in a kind of triangle pattern here. Looks like we could get a break to the top side, but we've already had one push lower here, and then we're trying to break out again. Just watch out for that 42 and change. Could actually call the top, and you could argue that actually part of the reason we're having this consolidation here is pretty much the 40 level and this previous top area here. But look out for the price action around there. Could be some great opportunities to ride a much bigger correction lower, depending on how that sets up. Maybe a false break through it and then a drop down. You've got to follow the price action for the moment. The trend is up, and we're looking for a break of this triangle pattern again in concert with the euro and the Aussie. Crude also doing the same. They're all beneficiaries of a reopening global economy. Same deal with Hong Kong and Chinese shares. So that seems to be where the momentum is at the moment. But just keep an eye on that 42 level. Next, let's have a look at Bitcoin. This is our daily chart, and still, we're in this kind of consolidation phase, and we've been talking about a potential breakdown last week, because we were in this little area here, and we thought maybe this was going to be the time that eventually the market plummeted down. It tried to push up, ended up pushing down, and a bit like gold, we've had these two little probes to the downside, which didn't get any follow-through selling, which is a good sign. And so now, maybe using this or internal resistance here, if we can get back through those highs, then we're going to come close to trying to move beyond the moving average and beyond the trend line, and that would be good. Then we'd have some momentum for an attempted run back up at 10,000. So not the most impressive false breaks, but nonetheless two of them coming in at kind of the same kind of lows we've been dealing with for a while. It's almost like it's absorbing some of the selling pressure before we can push on up to the top side. So let's see, this is still the downside target if we get that eventual false break lower. So that comes in around 7,700. So if we do stall at these highs and start getting some like more distinct closes through this area of support through here, look out for that as a target on the downside. But actually it's holding the lows pretty well. What we're dealing with here is rising lows and, well, you can say descending highs as well at the moment. So clearly volatility is contracting, but what I was going to say before that is that 10,000 was a kind of flat area of resistance above. So look out for the next test of that, I would say, if we can hold these lows, and then once we get back to 10,000 again, then we can obviously start thinking about whether that breakout's going to happen. I would argue it seems more likely if we get back up there, that would be something like the 1, 2, 3, 4, 5th test. 5th time is often lucky in trading. And last but not least, we've got the S&P 500. This is the daily chart. And do you remember we were talking about the 61.8 and 76.2 Fibonacci areas which had been defining the resistance? And then we were talking about basically the possibility of a sell down from there. But we were kind of talking about, so I've redrawn that trend line a little bit. But we were sort of talking about something like this, where it was a kind of channel down, and basically it was almost like a kind of rally up, kind of almost like a flag pattern, and then a breakout to the top side. It's a bit of, it's too large to be an actual flag, but it's something like that. Anyway, we kind of moved on from there. We readjusted to these two peaks through, 3 peaks I guess, through here, and it looks like we've had a breakout. A final test of the 76, a pullback to the 61.8, which coincided with this declining trend line, and we're rallying up and we're making new highs right now. So again, showing positive momentum here, like a lot of these correlated markets all are. Chinese shares, the Aussie, Euro, oil, and here the S&P 500 breaking up to the top side. Bitcoin falling behind a bit, but maybe have some time to catch up if these markets really pick up in momentum. Right, that's it. Thank you very much for watching, everyone. Have a great week trading, and good luck. Thank you for watching, of course, and please make sure to like and subscribe to the video if you've got some benefit, and if you don't want to miss next week's. Thank you.